Our Outlook 2016 series continues, and joining us now from the CME is Todd Bubba Horwitz. Bubba, thanks so much for joining us for this special edition of the Kitco Gold Report.
It's great to be here, Danielle, and I think what you want to look at, if you're looking at levels, I mean, I don't think we'll see it, but certainly if gold happened to dip down into that $1,000 level, I think you'd want to be a buyer. I think we're probably very near the lows, if not they're not already in. I think silver right in here, I mean, again, when you look at the overall space, Danielle, you really have to say, what is my risk versus what is my possible reward? So that's what I would be looking for.
Well, Bubba,
right here.
let's take a closer look at gold. The metal down around 10% on the year. Can the metal move lower in 2016? Do investors still care about the metal?
Well, now that's a great question, because for myself, I look at the metal as a commodity, not really as a currency. So when I look at it, I say it's under deep pressure like the rest of the commodities. So I think, could it go lower? Yeah, absolutely, it could go lower. But I think that the probability model states that it's probably going to go higher. And then, of course, if you see some more fear and markets start to sell off, then the people that look at it as a currency will start coming in. So I think it's got a lot more value here than it's being priced at right now. I think the opportunities in gold are to the upside, especially if you're looking on a longer term horizon, which I think that's what we're trying to do here, is look longer term. So longer term, you want to be an owner of gold. And I think you should start, you start buying now where you start to accumulate a little bit.
Well, Bubba, you mentioned it before. Some analysts are still calling for sub 1,000 gold in 2016. Is this still a possibility here?
You know what? I think there's always a possibility. But again, if we're going to go down another 4 or 5%, it doesn't concern me, because if I try to trade it from the short side, when we do get that short covering rally, and we know right now that there's a record amount of shorts out there right now. So as we go down, to me, it's more of a buying opportunity. Again, you have to look at the overall model from a probability basis. And yes, certainly prices can always go lower. There's no reason that it can't. However, we've already seen all the bad news that would play out into that space. Too strong of a dollar, a lousy economy, and all these other things that have played in. So that is really what has kept the pressure on gold.
Let's talk rate hikes now, Bubba. Do you think Yellen has enough room to continue raising rates in 2016, or do you think the December rate hike is just a one-hit wonder?
If it's at all, it would be only a one-hit wonder, in my opinion, and I don't really understand what they're trying to do. They have no credibility, so it's not a credibility issue. The prevailing theory here is that they're going to raise rates so they can lower them again if there's a problem. Well, why waste anybody's time? They're not going to raise them into the presidential election, and they're not going to raise them next year, because the bottom line is the economy itself is in very sad shape globally, not just in the United States.
Bubba, happy holidays, and thanks for joining us for the Outlook edition.
Happy holidays to you. Thank you.
And thanks for watching the special Outlook 2016. We'll have more for you throughout the week.